Welcome to Market Money, your weekly destination for exclusive interviews, insightful stock reviews, and financial education for sound financial decisions. This is where your money meets the market. I'm your host, Jermaine McDonald. In this episode, we'll be covering rights issues explained, why companies issue them, and what it means for you as an investor. Next, we'll review MFS Capital Partners, ticker MFS, on the Jamaica Stock Exchange Junior Market. We'll review their results for the quarter ending December 31st, 2023. Then we'll close out the show with a live interview with the CEO of MFS, Dino Hines. So before we start this episode, a word from our sponsors. This episode is sponsored by the Learn, Grow, Invest 12-month investment challenge. The investment challenge is a 12-month program with monthly investment calls, monthly challenges, special pricing on financial services, and a challenge community group. To sign up is $30 a month, and the link is in the description of this video. And of course, you can join the challenge at any time. Now let's get into this week's episode. Before I do that though, I have to say that the information that I discuss here will be for education and illustrative purposes only. So please speak to a licensed financial advisor before making any investment decisions. All right, so let's start with the rights issue. So a rights issue is an invitation to existing shareholders to purchase additional shares in a company, right? So why would a company issue these? Well, by offering the rights issue, it's another way to raise capital. So usually a company weighs its options between debt or equity. If they do decide on equity, then usually they're deciding between an APO or a rights issue. And then from there, it really then determines what they do next, right? So with a rights issue will come special pricing where existing shareholders can buy in proportion to their holding of what we call existing or old shares. And they would have the right to invest additional capital, right? So that's why it's called a rights issue. There are two types of these issues, right? You have renounceable and non-renounceable. So let's explain those a bit. So a renounceable right is the invitation to existing shareholders to buy new additional shares with the option to renounce that right. And then those rights can be sold or transferred. So you'll usually see that in the description of the rights issue. So you'll typically say, company A and their renounceable rights issue for X amount of shares, so on and so forth. And then for the non-renounceable, it's an invitation to shareholders to buy additional shares, but they don't have the option for them to renounce that right? So usually we'll look out for that. So we have two past issues here that we'll review very briefly, but Key Insurance Company, you're seeing their circular here for a renounceable rights issue. So they issued that a few years back to try and to make available 190 million additional shares. And then we have here Fosrich, their circular letter that was released last year for a non-renounceable rights issue. So we'll just look at just a little bit of the details for those rights issues so you can see some of the information that is usually there. Right. So this is the key rights issue document. Let me zoom in. So I'm not going to go through everything. I'm just going to go through the parts that would have made this rights issue unique. So it says here, so of course you have standard things like, let me go to this entire section here. So when this document is released, it's called a circular letter and not a prospectus, and it'll have the terms of the offer within the document. So I'll just go through some of the areas that I think are relevant here. So usually, let's start with G. So it says excess shares means that new ordinary shares that are not taken up by existing shareholders or renounced by the date on which the offer closes, including fractional entitlements which are disregarded and which are thereby released into the excess shares pool. Excess shares pool mean the aggregate of all excess shares, right? So that's something that you'll normally see. Then we have here the new ordinary shares. So it is additional shares being offered. So you'll see that that's usually what they're making available in order to raise that capital, right? So if they're trying to raise a certain amount, they'll issue shares at a certain price to get that specific amount of capital. And then the last thing that I'll determine here is renoncees. It means third parties in whose favor the existing ordinary stockholders has renounced all or part of the respective provisional allotment and who submits an application pursuant to such renunciation. A renouncee need not be an existing shareholder, right? So because it's a rights issue, as we mentioned before, existing shareholders have the opportunity to renounce their right. And then of course that now means that if that is the case, they would go into a pool and then persons are able to now apply for those shares from that pool. So that's the detail that you're seeing here. I believe that's it. Everything else is going to be now centered around the number of shares, the price, the date for which you need to be a shareholder to be eligible for the rights issue. There's usually a special share price that's there. So all of that will be within this circular letter. Let's look at the Fosrich non-renounceable rights offer. Let me see that here. There's a specific part that I'm looking for simply to explain the non-renounceable section. Hopefully I can find it fairly quickly. So this has a term here that's mentioned as abandoned shares. So provisionally allotted new ordinary shares which are not taken up or abandoned by existing ordinary shareholders to whom they have been provisionally allotted. Let's see here. So it says here there's an unallocated pool. So new ordinary shares arising from abandoned fractions because the existing ordinary stock units held by ordinary stockholders cannot be divided by 90 without leaving a fraction. So in Fosrich's case, the non-renounceable rights issue was one new ordinary share for every existing 90 shares. All right, so I'm going to zoom in a little bit more so you could see it a lot easier. So that would have been the context for which you get new ordinary shares, right? So if you had whatever number of shares you started out with, that number was divided by 90, and then you'd be eligible for one share for every 90 that you own, right? So that's typically something you may see as well, where the benefit you have is based on the number of shares you hold. And so that's something that you normally want to look out for. Let's see if there's anything else here. All right, I think that's it. So the main difference here really comes down to the renounceable versus non-renounceable. Also, you want to consider the price. In Fosrich's case, the stock price was trading very close to their rights issue offer price. So some investors were not too pleased about that. And then from there is really just to evaluate the offer and determine if you're a shareholder, whether or not it's interesting for you to get additional shares. If you're a non-shareholder, you'll assess whether or not there's an opportunity for you to purchase shares in order to take advantage of the rights issue. Everything comes down to the offer in question. You really want to go through that document to see what is being offered, the terms of that offer, and of course, see whether or not that particular investment decision makes sense for you, right? There's also a very popular discussion around rights issues that we won't get into right now. But if you have any questions about rights issues, just let me know in the comments and I'll be sure to do to do an additional video and cover that. All right, so the next part of our show, we're going to be looking at MFS Capital Partners Limited, ticker MFS. So MFS is a company that operates as a subsidiary of MFS Acquisition Limited, and this is a company that they would have formed to essentially do a reverse takeover of SSLBC. So that company holds 53.52% of the company's issued shares, and it says here on May 25th, 2022, MFS Acquisition Limited acquired a 79.08% stake in the company previously owned by Stocks and Securities Limited. And then on June 13th, 2022, an EGM was convened where shareholders granted approval for a name change, transitioning from SSLBC to MFS Capital Partners Limited, right? So that's a company that we're reviewing here today. The company's core business model focuses on investments in entities that are mature in their life cycle and have shown a track record of strong performance, as well as companies that have demonstrated the potential for sustained growth and development for the medium or long term. So the company's subsidiaries, collectively referred to as a group, include the following. So there's Bar Central Limited, and there's Muse 360 Integrated Limited, and all of the company's subsidiaries are incorporated and based in Jamaica. And then it's stating here, of course, for Bar Central and Muse 360, they would have ceased operations previously from in 2019. So we saw in their most recent statement, the company would have released this statement here about, says the group for the quarter was non-operating as there is a firm commitment to selling the subsidiaries, those two that we just mentioned before. So the company, however, reported a net loss of 9 million in 2023. The group and the company, as at December 31st, has accumulated losses of 156,329,809, and then it shares here for the previous years. So further at December 31st, it shares their current liabilities and it exceeded their current assets by 57 million and 15 million respectively for 2022. This indicates a material uncertainty that might cause significant doubt about the group's ability to continue as a going concern. And of course, it's something that we may discuss at a later time. Let's get into the stock price for the last year. The stock price is down 27% in the last 12 months. We've seen, I believe, highs of $3.85 and a little bit below $1, I believe 190 or 195 would have been the low. We'll get into those details a little bit later. In terms of their revenues, for the 6 months ending December 31st, we saw 360,000 of revenues, operating expenses of 22.5 million, profit before taxes of minus 17 million, and then of course earnings per share and stock price is $2.15 as at today. So the EPS would be negative in this case because there was a loss recorded for the period. In terms of their assets, there's 55 million of assets, equity of negative 15 million, liabilities of 70 million, and cash flow from operations of minus 467,000. All right. So in terms of trading details, the price range for today ranged somewhere between $2.07 and $2.18. The 52-week range is $1.50 to $3.95, so quite a bit in terms of range for the last 12 months. The market cap stands at 860 million, and the number of shares outstanding is 400 million. So there has been no dividends announced to date, but of course that may change in the future. In terms of their outlook, it says here, as the year progresses, the company's strategic approach will focus on exploring the market for profitable acquisitions to increase the company's portfolio This will drive heightened growth and profitability for the organization and its shareholders. And under the guidance of current ownership and management, the primary objective is to secure capital to facilitate worthwhile acquisition and bolster working capital. Additionally, the company will look to explore investment opportunities in the investment banking and real estate sectors. And so that's a perfect segue for us to invite Dino Hines, CEO of MFS, to join us. Hi, Dino. How are you doing?
Hey, good night, Jermaine. Thank you for having me.
Thank you for joining us. I said to you before, you're always willing to join us, and I really, really appreciate it.
Yes, whatever opportunity there is to interact with the investing public as much as time permits, I will always take the opportunity.
All right, awesome. So let's get right into it. So you held your AGM just yesterday. Unfortunately, I wasn't able to make it, so I'm going to ask you to just give us a highlights of what we might have missed from the AGM.
Well, in the AGM, we focused a lot on microfinancing solutions, and the reason why we did that is we basically inform the shareholders that the last stage, which is submitting the company documents to the company's office at Jamaica to transfer the ownership of the company from its current owners to MFS Capital Partners, is underway, and therefore we expect that in days and worst case scenario 2 weeks that should be completed. So because of where we were with that, and because that is our very first acquisition, and the path forward for the organization will lie a lot in the performance of that company. We spent a lot of time showcasing and talking about the assets, what the company does, and the way forward for MFS Capital Partners and microfinancing solutions.
Okay, great. Thank you for that. So there was also, I believe, an article that came out and said that a rights issue was approved. Can you confirm maybe some of the other resolutions that might have been passed that we may need to take note of?
Yeah, so we had announced a number of resolutions coming out of our board meeting in January that we intended to put before shareholders. I will tell you some of those that I think the audience found most interesting. The rights issue, of course, is one. A conversion of debt to equity was the other. And I think maybe the one that caused the most controversy was a proposal to reward key employees with stock in the company. So that one, I think, was the one that caused the most questions. The other resolutions are the usual that you would have at the AGM, confirming the auditors, re-electing directors, and confirming the financials and so on. So I think in all, it was, while there are a lot of questions and a lot of interest and so on, it was a fairly uneventful AGM when you compare it to some in recent past.
Well, I mean, uneventful, it is not necessarily a bad thing.
No, it's not.
Um, there was also mention of MOUs around three companies. I believe Hickey Grant Property Masters, Postage Logistics, and e-business solutions. Can you give us a context around that and what those MOUs mean?
All right. So now that we have come where we are with MFS Limited, the idea is that we need to move forward with a couple of other acquisitions, and therefore, while we were having conversations with these companies, and a lot of these acquisitions are strategic in their nature, we like the companies because they are fast growing. We have looked at what they have done over a couple of years, and we like what they have done. They are still private companies, so I can't say give a lot of details in terms of their numbers. The idea also is that these are MOUs, so it's not that they're done deals as yet. We're comfortable and confident about the MOUs, and we expect that they will be we will be able to conclude these deals. But the fact of the matter is that anything can happen. So you're not going to dive too deep into the details, but I can tell you a little the thought process behind why we look at some of these companies, apart from loving their growth over the last couple of years. Um, I said this at the AGM yesterday. Logistics, I think if you're building out a branch network across Jamaica, then logistics works well with that, because you will have pickup points for your packages and so on, and you'll be able to compete with some of the other guys that are on the market across Jamaica. We are doing it differently and therefore more efficiently and effectively, because our our locations will be one-stop shop for not just money services but also logistics pickup point, and therefore our cost of doing business, because we are offering more than one service out of our locations, will be cheaper. So we look at it and we know that we will be able to compete. We'll be able to compete efficiently and in a cost-effective way. We already announced that we are in the real estate space. Over the past couple of years, we have acquired a couple of pieces of real estate. One of them is owned by Microfinancing Solutions, and thus will be owned by MFS Capital Partners. And because we're in that space and we have looked at forward and backward linkages, and therefore it was and the acquisition, or the MOU, or pursuing an acquisition or a stake in this company, was very natural for us.
All right. So the plan or the strategy, based on what I'm hearing you say, is to look for opportunities to acquire, to essentially grow the business, because the business strategy itself is to grow through acquisitions, to generate revenues through acquisitions.
Yeah, we're looking. We Our revenues, we are looking, as I said at the AGM yesterday, to hit $1 billion in a 3-year timeline, right? And we also want to ensure that it's not just empty revenues, but that our investors will feel it in the bottom line and will be able to pay dividends and so on to our investors. 'Cause that's why they're in, apart from the fact that they expect some capital gains from the stock. Also, the core reason of investing in a company is dividend. I mean, and therefore we're looking to really achieve these objectives and be able to deliver to our shareholders. Now, there are other entities that we're looking at that will take a longer time to complete, or to get even to the the stage where we will sign a MOU, because we have to ensure we do our due diligence. We have to ensure that or the market, that when we come to the market, I mean, I will learn from our mistakes, right? So look, we want to ensure that when we come to the market to announce MOUs or anything like that, that our ducks are in a row, and the time frame between announcing an MOU and completing an acquisition will be short. Or if we're not going to complete it, that will also be very short. So we don't want a repeat of a 20-month period where that we took with the MFS Limited. So we want to ensure that all our ducks are in a row. So we're looking at other companies that are larger. We're looking at other strategic alliances. But until we get to that level, we're not going to make announcements on them.
Okay, that's fair. I guess you want to just ensure that you have something tangible before you make an announcement, which makes sense.
Exactly. Exactly. Right. I think you chip out for a little minute there, Jermaine. So I didn't hear your last statement.
Amen. So I was saying that that strategy makes sense because you don't necessarily want to say something to the market, have investors respond if it's not something tangible.
Exactly. And we took the time over the last quarter to kind of work, put some work in, and to push MFS over the finish line, and we're happy with that. We think there is a lot of value in the company, on top value, of course. And persons are asking like about the White House property and so on. I mean, I don't know if you want me to take 30 seconds and speak on
Yeah, man,
that.
please.
So we acquired the property. Um, we basically, it's 27 acres. It's in a prime location. It has a view. It's not seaside, but it's a view of the sea. And when we acquired it as a project because the vendor had already had the Westmoreland Parish Council approval for 90 lots, and there were approvals in place in terms of JPS and NWC already. So that would give us a head start as it relates to monetizing this property. So, we have started the process, started the discussion, and, we'll keep our shareholders updated because, of course, if we're able, the announcement is that we made yesterday was that we 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 are looking to do our first dividend payment, by the at least the end of 2025. It's not the end of 2025, the end of the in 2025, thereabout. And if we're able to meet the timeline in terms of this project, or even if we're able to exceed it, that's definitely a dividend play right there because the expected cash flow or inflow of cash from a project like that would definitely give the company the ability to pay dividends.
Okay. That's a good goal to have. So I'd ask you, what do you see that could potentially go wrong? But I'll hold that question since it's so far into the future, and I know we'll have another conversation before then. So I'll
Sure.
move that question ahead. So I do have a couple of questions here. Let me get through as much as I can. I know we have a limited time here, so let me just take this one here. So it says, how much debt will MFS Capital Partners take on to pursue the acquisition of microfinancing solutions, and how much of this debt will be converted to equity?
All right. So the question, and I'm going to answer the question because the question will be answered um, to the entire market and investor base in short order. I think, based on our company secretary and the advice we have gotten is that upon the completion of an acquisition, now the rule states that there's a number of days after you have announced that the thing has been completed, where you have to announce also the price you paid and the basis of the valuation. And therefore, I think make those when we put that information out in the public space, the market and the entire market will get that information at the same time. So I wouldn't get into the specifics of that right now.
Okay, can you maybe say whether or not there is an intent to maybe convert some of the debt, regardless of the amount, to equity? Can you confirm that part of it at least?
Well, the method of payment, or the agreement in terms of the payment, that would leave the MFS acquisition with the right to convert some of the debt to equity.
Okay.
And that option will be there. Um, it's whether or not we'll exercise it.
Okay. Okay. Fair enough. All right. So next question here. At AGM purchases of stakes in, well, the three MOUs that we spoke about, when might these happen and how will they be funded? So you spoke a little bit about it already. You also mentioned that I guess it's not necessarily confirmed yet.
Right.
Um,
But we have
so I guess
identified, based on the question, okay, we have identified the funding for the acquisitions already. Um, the all of the processes are at different levels in terms of where they are along the process. So when they might be completed, I'd say, I
and how
mean,
they will be funded.
they'll be funded. Um, so in terms of I mean, these are, yeah, and I'm trying to be very careful because I said these are still private companies, so I don't want to dive too deep into the agreement or the relationship. But in terms of answering the question of how far along they are or how soon they will be, I would say that in terms of the queue, we are further along with postage logistics um, than than the others, but
Okay.
we're comfortable and confident with the others. Of course, as I said, there is any possibility that something can happen during the due diligence process that makes you don't want to go ahead with a deal. But we have not seen anything so far that would dissuade us from moving forward with the transactions. But in
Okay.
terms of where they are in terms of a queue, postage logistics is the further side. And I guess persons will see that because on um, on my social media, I post them quite frequently. It therefore, um,
That you're always down the road if you're
right.
posting that kind of detail. Okay.
Yeah.
So in terms of how will they be funded, can you say debt versus equity? You don't have to tell us the amount, but maybe the way in which they're being funded.
Well, the company has the cash now to pay for them.
Okay. Okay.
Yeah.
All right. So cash is the method there. And I believe this is the final question of all the potential acquisitions and subsidiaries of microfinancing solutions. Which one will be listed first on the stock exchange?
They're talking about the potential and of MF subsidiaries of MFS Capital Partners, I suppose they say. It's MFS Capital
Yes.
Partners is there.
Yeah, so of all potential acquisitions and subsidiaries, which one out of all these companies that are either being considered? I guess you would only speak about the ones that are confirmed. It wouldn't make sense
Right.
to
So
speak
there's
about the
the
potential.
exactly.
Which one do you see being able to list on the stock
Okay.
exchange?
So I mean, I the intention, of course, when you have portfolio companies, is to at some stage to monetize or to get some value out of the business, right? Now, the company, if for me to want to list a company, to list any one of these companies, I would I would want to get a company to a valuation of at least $1 billion. I mean, I'm not answering the question in the specific way it was answered. I'm just giving you a general of where my thought process is, right? So I would want to get a minimum of $1 billion in terms of a valuation. And if you look at, I guess there's no similar company to like a MFS on the exchange. Maybe the closest would be Lasco Financial Services. Because since we move away from micro lending, we're not really, you don't really compare us to dollar or so on again, right? But so if you're looking at $1 billion valuation and you're looking at, Lasco or, even dollar in terms of how they were listed, and you therefore want to ensure that you're hitting $150 million net profit, and therefore with a 10 times or 8 times valuation, you get into $1 billion. So I think persons can look at that, in terms of those metrics to see where we want to go with the companies and who would be first. Because the companies that we acquire, their numbers will start to become a part of our consolidated numbers over time. And therefore, if you see us, any one of our subsidiaries hitting $1 billion in revenues and like 100 to 150 million in net profit, you can be assured we're talking to our brokers.
All right, that was actually very very clear in terms of at least a path or an expectation. That was very helpful. Thank you for that.
Right.
Is there anything that I did not ask that maybe you thought investors or shareholders may want to know? Somebody who might have missed the AGM and is watching this episode now.
Um, I think there's always things that persons want to know, Jermaine. A company like ours, not MFS Capital Partners, but the part that the company took prior to us acquiring it, and it's many different lives, C2W, SSLVC, all of those, makes us a company that persons are curious about, and therefore they will always be persons questions that persons will ask. One thing that I'm happy about is that we have persons who are supportive of us, confident, who are confident in myself and the rest of the team. And I can't never not come on our program and not say thank you to the team that I have around me, because we are a small team, but they work hard. They go above and beyond in terms of the color. So I think because of that aspect and the curiosity around us, I will always make myself available to come back and speak more to your audience. We have announced it before, but we didn't do it. But we're definitely going to be doing a forum. Prior to this journey that we went on, we used to do a program called Cocktails and Conversation quarterly, and that would give us an opportunity to meet and to interact and to educate our clients and investors. And we're definitely going to be doing one in April. I've already approved the funding, so we definitely will be doing one in April. So we will be much more. One thing that my shareholders have said to me, they reach out to me all the time, and they have always said to me, speak up more, talk up more about your plans. So I intend to do a lot more of that this year.
I agree, right? So I was having the conversation with the CEO of NCB Group, and I know you're a fan of NCB, and that's why I'm raising it here. But we spoke about how investors build confidence in companies is when a company share their plans, right? So as I understand, you may not be able to share some things based on rules. As much as you can share, it's always helpful for the investor to see a path, right? You may not know every single detail, but you need to be able to see a path to growth, a path to profitability, a path to dividends, right? It's one out of those three things that you're looking for as an investor. Otherwise, you're just investing blind, right? So
Agreed.
grateful for the information, grateful for the insights that you've given us. And I want to thank you again for taking the time.
I thank you very much, Jermaine.
All right. All right, everyone. So if we missed any questions from you, be sure to place them in the comments below this video. And I'll try to just host another interview similar with Dina in a few months. And we can be sure to get some of those questions answered. When we get closer to the rights issue, once it's announced, it would make sense to then maybe have him come back and speak some more about that. So it didn't make sense to get into any of those questions here. All right, so with that, we close out this week's episode of Market Money, which again is brought to you by the Learn, Grow, Invest 12-month investment challenge. So you can sign up now for $30 a month. More details are in the description of this video. So to recap this episode, we looked at rights issues, how they work, and the value to you as an investor. We reviewed the MFS stock. Their 6 months results ended December 31st, 2023. And we closed out the episode just now speaking with Dino Hines, the CEO of MFS. So if you found value in this video, take a moment to give us a thumbs up, subscribe to the channel if you're new, and share the video with a friend who needs to learn about investing. So we'll be back next week with another great episode, and I hope to see you soon.